Unless you're retired or getting ready to retire, VA lenders are going to verify your employment situation at the start of the loan process and again just before your loan closing. Before issuing loan pre-approval, lenders will usually need to look at pay stubs, W-2s, and other income documents. But they also want to make sure that your employment situation hasn't changed as your loan closing nears. While it isn't terribly common, some prospective borrowers do lose their job or change jobs in between getting pre-approved and receiving that clear to close. Lenders want to make sure that you're still in a position to repay that loan. Any change to your employment and income situation is serious, and it could even derail your VA loan. Now, guidelines and policies regarding verification of employment, or VOE, can vary by lender. There are a couple different ways lenders can verify employment: verbally or with a more formal written document. Lenders typically seek to verify how long you've been working for the employer, your position at the company, and if necessary, income information and the likelihood of continued employment. For many borrowers with a single consistent income stream, a verbal verification of employment, a VVOE, can suffice. This is typically accomplished with a phone call between the lender and a representative from your employer. At Veterans United, we'll typically complete a VVOE no more than 10 calendar days before your loan closing if you are an hourly, salary, or commission worker. For borrowers who are in the military, an LES, a leave and earnings statement, dated within 30 days of closing is acceptable instead of a VVOE. It's a little bit different for self-employed borrowers. So for self-employed folks, we'll usually do these two things within 30 days of closing. One, we will verify the existence of the business using a third party, like a CPA or a governmental agency. And two, we'll verify a phone listing and an address for the borrower's business. Borrowers should keep the VOE in mind as they move through the mortgage process. Some jobs and employment scenarios can pose unique hurdles. For example, it can be challenging to verify employment for school teachers if they're closing on their loan during a holiday break or over the summer. And that's just one example. So talk with your loan officer if the nature of your job might make it more challenging for us to contact your employer before closing. Now, there are also times when lenders will want to conduct a full written verification of employment, a full VOE. This is a more detailed and involved process, and it often comes when borrowers have more than one major income stream. At Veterans United, we would typically seek a full VOE if the borrower is qualifying with multiple types of income, or if there's some kind of discrepancy regarding the borrower's dates of employment. We would also require a full VOE for borrowers who receive handwritten pay stubs, or those who are pursuing a loan while on a temporary leave from work. Talk with your loan officer immediately if your employment situation changes during the loan process. Changes to your income and employment won't automatically stall your mortgage plans, but lenders will need to take a closer look to assess your ability to repay the loan and keep moving forward.